What is going on YouTube? It's Brendan from Market Makers. Welcome to the Sunday show, everybody. I would say this is a pregame kickoff, but Bitcoin trades 24/7. We are going to look at commodities as well in this video because in our country, Bitcoin most likely is going to be regulated by the Commodities Trade Commission. So we're going to go ahead and start grouping those together. So we'll look at the metals. I did make a separate commodities video within the last week, so you can check that out as well. But we'll look at the metals and we'll look at oil and natural gas as well. After this video, my separate equities video will be coming out. Again, that's a pregame kickoff for the equities futures markets to open up. This video will be brought to you by BITGET, guys, our longest sponsor. Fantastic exchange, top 5 by volume. Check them out. Link in the video description. Get all of our goodies, bonuses, and everything with our link. All right, so let's talk about what's happening with Bitcoin, guys. Bitcoin here on the weekly, the Gann price pulse pattern. This is a Gann market pattern. I call it my price pulse pattern. 3 waves, 3 primary waves, ABC correction. Again, this is a pattern that repeats itself over and over again in different asset classes. Bitcoin's previous bull run, 3 primary waves, ABC correction here on the macro time frame. Important to note for the new subs, I don't trade based off this pattern. This is a market directional pattern, okay? But it's been tracking very beautifully. A lot of people are asking me if Bitcoin does come down to say 15, 12K, whatever, what do I do with my wave count here? Well, I just move my A wave over. Again, the weekly time frame doesn't affect how I trade. As you guys know, I'm trading on the daily, the 4 hour, the 1 hour. That's where I'm doing my trading. So this is just for market direction. But the markets, the equities markets, do look like they were trying to hold a bottom. Again, earnings are coming out this week in the equity space. 40% of the S&P is reporting this week and next week. So you really have to pay attention to what happens with these earnings. So it's been a mixed bag. JP Morgan missed badly. Other companies like Taiwan Semiconductor did very well. So it's been a mixed bag, but they look like they want to rally. And again, I do believe they will rally to resistance, and you want to fade this rally wherever they make a top. You'll know when they're getting close to a top. Watch this show because we'll be talking about it, guys, because we trade all the marketplaces here. So on the weekly time frame, if we did fall down, I would move that A wave over. But right now, everything still looks copacetic, okay? So we still have our A wave bottom there at 1776. And then we have Bitcoin coming up here potentially July 25th for some type of fadeable rally. We'll see if Bitcoin does in fact rally. Important to note, the termination point, 'cause I always skip over this, is that 10,591 based off phi. The golden ratio, 1618, is at 10,591. And this, according to Fib time, would be March 2023, which I found interesting because March and September, the 45 angles in the Gann calendar, and that is when you see a lot of market bottoms and a lot of market crashes, going back to .com, going back to a market bottom in March 2009 of the great financial crisis. So lots of bottoms and lots of crashes in those 2 monthly periods. So we'll see if this plays out in a big macro sense, guys, but it doesn't affect what we're doing as far as trading, but it is fun to watch and track. And let's go ahead and look at Bitcoin on the daily. Very defined trading range here in Wyckoff, right? We have our selling climax, we have our reaction, and we're just waving back and forth. Remember, the more you wave, the weaker you make resistance if you can hold your trading range. And you can see this range is actually very well defined here. If I put my cursor here, you're really at like 18,959 is that bottom that you're holding. So you're trading in a very tight range, coming up to the Wyckoff ceiling at 21,711, falling back down, and then you wave down, wave up, wave down, and this weakens resistance, right? So if we throw Ichi on here on the daily time frame, we got that big fat red cloud. You see that? But then look, see how it keeps tucking in? It keeps tucking in and it'll get thinner and thinner the longer you just wave and wave and wave. And we'll see if we can pop up to test the cloud here somewhere. But let's go ahead and look at this. Actually, we haven't done this in a couple of days. Let's look at the 200, 233. Because like I said, I do believe that will be my market top wherever these are for any type of strong rally, okay? Now, these are up here splitting the difference between the two about 35,264, okay? So again, I don't see any type of bullish momentum to get you to 35,264, but that would be if there was some type of crazy rally where I would expect a top to be formed at the very latest. Looking at the 8 hour, again, very defined trading range. So I want to spend some time with you guys on the 4 hour. 4 hours where the fun is, okay? Let's go ahead and do the 4 hour here. We'll do a couple different things. Yes, we do have our Wyckoff trading range. I mean, we have this in every time frame, obviously, but we can go ahead and put this climax candle in here, put this reaction candle in here, and you can see you're trading in that trading range, right? Again, in the upper echelon here of that trading range. So let's go ahead and remove that because that doesn't really help us a whole lot in this situation. Let's use some different Fibonacci tools. Grab a shift pitchfork, go to this swing low, to that swing high, down to that swing low, and look how beautifully this lays out. Again, another Fibonacci tool. And this is the shift version. The Andrews pitchfork is named after Alan Andrews. He never called these things pitchforks, by the way. It's just the way that he laid out his trend lines. But when you look at this, this is the 100% move, okay? So you have it tagging here at the 100%. I have my 382, my 0.5 is a dotted red line, the 618 is there in gold, okay? You can set your retracement levels, how many you want in the pitchfork. The green center line is your median line. But as you can see, very accurate, tag the top, tag the base, tag the base. You see it over and over again. So I like how this is tracking, and you're struggling right here on that median line. You tagged it, you fell back down, you made your cup, and you came back up. So this is laying out really nicely. Just looking at this for a trading range, just another way to view the marketplace, guys. Something else I want to show you guys. I was playing around this morning with the 200, 233. So my 200's this white line, right? This is a simple moving average. I don't like simple moving averages and asset classes like crypto. Simple moving averages are weighted evenly across the line. They are not fast moving, reactive moving averages. All of these are lagging. Okay, these are lagging indicators. These are not leading indicators like volume. Now the EMA, which is my red line here, that's the exponential moving average, which is a faster speed. It is weighted more heavily to the front of the line, and you're supposed to use that in exponentially moving marketplaces such as crypto or commodities, okay? Now what I have in the middle here, this is a volume weighted 233. Now again, these are all TGMA from Fractal Trade 15. You can download those. Just type in TGMA in your indicator and it will pop up. You can see it's from Fractal Trade 15, trend gradient moving average, okay? Now you can select the type of moving average. The reason I added this volume weighted one, I want to show you guys this. So the 4-hour time frame, we've been over this ad nauseum. Key area to look at your long-term moving averages. And the reason I added it is because I was looking for confluence, right? I was looking to see what hit what at these peaks, the surges. So here we have the 200 simple moving average hit with the 233 volume weighted moving average. This is the only one, the volume weighted moving average, that caught these peaks. You see that? Again, what you're looking for is confluence. I'm looking at my money flow index here. MFI peaked out right here, hit the 233 volume weighted as well, and then began to fall, okay? And I was just playing around with this on the 4-hour time frame. I'm always looking for an edge in trading to see what's more accurate. But I see a reason to keep all of them. That's the problem. So really, it's just about confluence, okay? Because here you have the volume weighted moving average, again, the only one that caught that peak. So this looks like a really interesting moving average. Again, this is basically a moving average taking volume into account. So it brings the line closer to where the trading action is. And I'm using 233, which is a Fibonacci number. But you can also see the value of just like the 233 EMA. That's the only one that caught that. So this is just like a personal preference thing. You can play with this, see if you like one more than the other. Play with it in different time frames. You might find an edge on a chart. I wanted to share that with you guys because I did find it very interesting to see the different ways the volume weighted versus the EMA versus the simple. And again, the simple is the one I like the least, but this is what the institutions and the big banks use, right? They use very basic TA concepts like the 50 moving average, a simple moving average, the 200 moving average, a simple moving average. That's how they trade. So I like to look at what they're looking at. But as far as my trading, especially right here, right, that 233 volume weighted would have been really nice to have on here to see you struggling here above the median line in the pitchfork and then rolling down, because this is a little decline, 21,661 to 21,000. So it's a 650 plus point decline. But you could have caught that little scalp there using something like that 233 volume weighted moving average. So on the 4-hour time frame, guys, I mean, what I'm looking at here, money flow did peak out. over here. So we had divergence. You see this? Money flow peaked out. Money flow was coming down as price was going up. So you did have divergence, bearish divergence with the indicator. So you can see this come back down. You are still in the bullish above the median line, but you're caught up in your EMA resistance cloud now. So this could roll down and this may end up making some type of head and shoulders. But I think it basically, when you zoom out and look at your larger time frames, it's just consistent with the wave patterns. I mean, these are very consistent wave patterns, right? And you can see this. You can use your trend-based fib here on the 8-hour time frame. Take the previous wave. You can see where you're getting up to. You can see your 0.5, your 618, you got above it, fell back below it. So, you know, I always zoom out and look at the other time frames, and we can take our trend-based fib here. We can even try laying it out the same way we laid out our pitchfork and do something like this. Come on. There we go. And lay it out like that, and you can see the same thing. Got the 1 fib up here lined up with the 100% retracement on the pitchfork. Your 618, which you fell below, you pumped up above it, hit your volume weight at 233, fell back down, okay? But you're just making these larger wave patterns, and this also, you can see that double bottom. See that W there? But you're faltering here. There's just no momentum, guys. You know, it's interesting looking at the exchanges, right? Coinbase was a top 3 exchange. I think it was... They'd go back and forth, but it was basically Binance, FTX, Coinbase. Coinbase is not even in the top 5 anymore. They posted a $435 million loss last quarter. Lots of their users have left for different reasons. One of the reasons being that news that leaked out that if your assets are on Coinbase and they become insolvent, file for bankruptcy, they can hold on to your assets just like Celsius did, just like Voyager did. So it's always be very careful, guys. We say this all the time. We tweet about it. Only keep on your accounts what you guys want to trade with, right? Just keep on there what you want to trade with. Don't use your account as a wallet. Don't have all your money that you've made that you don't even trade with, but you just leave it there because you're lazy, you're busy, whatever. Don't leave it there, okay? Just take it off. So just be aware of that, guys. So this is what Bitcoin's doing now. It just looks like it's struggling. And let's go ahead and look at our Nubium. Let's see where our heavy volume weighted, this is our VWAP strategy. Volume weighted average price. Here's your heavy supply line lining up beautifully with the 1 fib, basically 22,901, also with the top of the pitchfork. So if we do get a little bit more bullish, this is an area you want to watch, the 22,901, but right now you're struggling, so we'll see. Again, this is just wave pattern accumulation. The market, I do believe, wants to rally, it wants to base, but it's a matter of time, guys. And if those earnings come in super bad in the equities markets and the equities, specifically the NASDAQ and Russell, do fall, I would anticipate Bitcoin giving up some value as well. Let's go ahead and turn that off. And then let's look at just 1 or 2 more things. Let's look at the Donchian. Donchian tracking beautifully as well. Again, you know, just accuracy of some of these indicators, your bases here. You get wicks above it and all that stuff. But, I mean, there's your top, again, your bottom, and you came back up to your top. You see that with wicks above it? So the Donchian is tracking beautifully, and you can just see the wave pattern. It's just a wave, guys. So you can do scalps in here. I've told you many times the way that I trade is at extremes, right? So I like to trade when you have peak resistance or strong support. So looking at this methodology on the 4-hour time frame, the bottom of this pitchfork is really strong support. The top up here is peak resistance. So if we get some price movement, start encountering these different long-term moving averages, these different retracement levels, this is an area that I'd be looking to potentially short on this wave pattern. If we don't, once we look like we're peaking out and making a top, you know, we get oversold signals on the MFI, overbought signals, I mean, on the MFI. Same way when you're going down. Right now, we're just stuck here in the EMA cloud, still bull in the bullish trend, but this is just price faltering right here, okay? So let's look at the metals. Let's go ahead and look at gold, guys. I'm looking at the weekly specifically. And the reason is I want you to see the big macro picture. A lot of people have in their mind, you know, crashes, you want to own gold. High inflation time periods, you want to own gold. This is true for the metals in general, right? In a vacuum, that's true. In reality, with the marketplace, it is not true, okay? Because the problem is, even though we have record high inflation, 41-year high inflation, The problem is the market still believes the Fed. As they raise interest rates, the dollar has inflows coming into it from around the world because other people's currencies are weaker than ours, and the dollar's value keeps going up. If the dollar's value keeps going up despite the inflation, which would weaken the dollar, you're going to see the metals struggle, okay? And another thing to really understand, and I've been over this a couple of times, I went over this in my commodities video as well, guys, but in market crashes, gold and silver also crash. Here's your pandemic crash. Okay, I show you this in the other video as well. This is from the pandemic. You got a decline here of 15%. So is it as bad as the equities market? No. It's not as bad as the equities market, but you can go back to the GFC, the Great Financial Crisis, and you can also find these crashes. So you just have to be aware of this, what happens with these markets. Everything crashes when they're pulled down by the markets. Part of this is panic selling, 34% decline from the GFC, okay? Part of this is panic selling. Part of this is banks needing the liquidity, large holders of metals in these contracts needing the liquidity to cover other calls or other margin calls that they might have on other assets. So, I mean, this is something that happens in this space. But this is very bearish, okay? You're in a distribution box. You're coming down to your 200, 233 on the weekly. The reason this is really important, I'll show you on silver, because silver broke below the 200, 233. If you can hold here, you also have the 1 fib at 1672, okay? This blue line. If you can hold here and get a down thrust like you did here, you could come back up and have some nice volatility, come back up into this range and challenge some fib levels, okay? If you fall through here, fall below the 200, 233, you're looking at 1425, 993, which is where gold would be looking to move down to. And I could totally see that happening, to be honest with you, okay? I would want to see the 200, 233 get respected here on the weekly. I want to see it hold this 1 fib because the Fed is raising rates. They're looking like they've already baked in the 0.75 here in a couple of weeks, and they may go as high as 100 basis points. That's not going to help gold's case. The sweet spot for gold is if and when the Fed pivots. When will the Fed pivot? When they think either A, inflation's under control, which they won't be able to get it under control without raising rates above inflation, or B, they pivot because the markets have come down so much they have to pivot. The economy's contracting too much. There's too much destruction. They have to pivot. At that point, if you still have 5, 6, 7% inflation, I think you could see a surge in gold and a surge in silver because you are in a high inflationary environment and the Fed never finished the fight. They didn't finish the fight, but we don't know. We're not there yet. So what I'm saying to you is you have time. This is a bearish trend. You could even bounce up and come back up and roll back over. I mean, you've been doing it over and over here, okay? I'm not saying it's not tradable, but my family owns metals. I own metals. I wouldn't buy metals long term yet. I don't like this trend because if the Fed does continue to be aggressive and raise rates, even though it is a paper tiger because the rates will never get above inflation, you could see gold capitulate and start finding its way down, okay? Looking at silver. I didn't throw this in yet. Let's do silver real quick. So we have our buying climax candle here in Wyckoff. We have a reaction. And you can see our Wyckoff trading range, okay? Now, this is what you want to look out for on gold. Let me show you this, the very end here. So just walking you through, you have your buying climax, you have your reaction, you have an up thrust outside the trading range, you have volatility in the trading range, you get a down thrust, sign of strength, down thrust, sign of strength. You see this? And then this is where you hit your double top, you fall down, and look, your inverse cup. That's what you want to look out for on gold, okay? On the weekly, as you fall down like this, let me zoom in a little bit. As you fall down like this, you want to make sure you don't find the support, come back up, hit a fib level, because we'll get a fib projection once we have candles, hit a fib level and do something like that, because that's exactly what silver did, okay? If we throw our 200 and 233 on here, get rid of that. Throw 200 and 233 on here, you can see it's exactly what it did. It found support based off the 200, 233, bounced up, rolled right through them, and now it's capitulating, okay? Let me show you where silver is going. Get rid of all these lines. And let's go ahead and get a fib projection here. So I'm going to go to the swing high here on the weekly time frame, down to that swing low. Is that the lowest? 2142 or 2142.7? 42, this one, up to that swing high. Look where you found support magically at the 1 fib at 18.23, 18 spot 23. You see that? Will this hold? It could. To me, I think you're going down further. 1618's at 12 spot 85. All right, so just so you understand, a couple of different things here happen. In the pandemic crash, silver got down to the $12 range. You can see it right here. Here's your pandemic crash on silver, okay? You got below that $12 range. In the GFC in '08, the great financial crisis, silver went to $8, okay? Silver went to $8. So if you lose 18 here, yes, you have supports in here, other weaker support levels. But again, looking at long-term trend, okay, this is exactly what I'm looking at in the equity space. Long-term trend, here's your big buy-up, right? And now you're descending. In a way, the metals are kind of leading the equities here because you know the traders or the marketplace believes the Fed. So you're seeing the metals capitulate first, but you can go down to 18 and then down to 1281. And honestly, I mean, look, you got wicks past here. You see that? You got all the way down. I got to squish this up. You got all the way down here to about $11.64. And you can see how close that is to the 1618. Okay, so if silver loses 18, I would expect it to come down to 12. And these could be great buying opportunities at that juncture, guys, because remember, if the Fed has to pivot because the markets are cratering and they haven't fully finished the fight with inflation, which I don't think they will be able to finish the fight, but if they haven't finished that fight, that is a sweet spot you could see for metals, okay? High inflation and the Fed pivoting. When I say pivot, what does that mean? Cutting back interest rates, potentially quantitative easing, which of course will feed the inflation as well. If they're no longer tightening, you will see metals go up in value. So just pay attention to silver and gold. Oil, guys, we've been trading in and out of this in the room. Oil, you know, traders were pricing in the recession. Again, that second quarter GDP print comes out at the end of this month. And after the day after the Fed raises rates at the end of the month, oil fell below on the daily. It's below its 233, pump back up. Again, this is a bearish trend. You see this? You're making deeper lows, lower highs, all through trend here. So this could come back up to say 101, and it could roll over again. So we're going to watch oil closely. And this is supply and demand, but commodities traders, I've said this, are very savvy. You have money flow right here. You're just about hitting your EMA resistance, still below the median line, so it's bearish. But commodities traders understand when you have demand destruction around the world because of the quantitative tightening, because of rate hikes, that slows the economy, it destroys portions of the economy. You will see unemployment rates also go up, jobs, companies will be doing layoffs. They haven't even revised most of the earnings yet, okay? But commodities traders are pricing this in. So this can still spike up because it is energy and winter is coming. All right, winter's coming. Old Game of Thrones quote. Winter's coming for Europe, and they have a massive energy shortage. Germany is rationing hot water. So energy is a field to watch right now in a bearish downtrend and is definitely tradable in these ranges. Looking at nat gas, guys, I mean, this was, guys in our room got in on this. They jumped on nat gas when it fell below the 200 and 233 on the daily. Now, I personally didn't get into this trade. It was in other trades. I think it was also in oil. But this came down, back tested your 200, 233, fell back down again, but it made that WW double bottom. And Europe relies heavily on natural gas, LNG. But you can see this as well. I mean, look at the pump, okay? You can look at this pump going up here. Let's go ahead and get a trend-based projection here of where this could go. Let's take this wave here. We'll go to this low spot, swing low, swing high, down to, that's the low. This looks to me like the 618's at $7.28, okay? $7.28, and you can see your money flows approaching overbought area, so you could probably come up to that 618, maybe get some wicks above, hit this GAN resistance, but that might be where it starts to form a top, and it'll either pull back, get some type of cut pattern, look for a pivot up higher, or you could just have some sideways action, or you roll back down, right? I mean, you have to watch the candles, how they form, how they pattern, but this was a fantastic move on natural gas. We'll be watching that closely as well. Guys, you want to trade with us, check out our room, the join button underneath the video, 11,000 people on our Discord, and our Telegram link is in the video description. If you want some trade signals, you can join via Telegram. Watch my video coming out next on equities. Man, I thought this video would be shorter since I wasn't doing equities, and I just did 24 minutes. So sorry, guys. Happy Sunday. Talk soon, everybody.